In your own words, what do you think wealth is? At Centonomy, we believe that wealth is the ability to live the lifestyle that you desire without having to work for it. Okay? I'm going to add something. The ability to live and maintain the lifestyle that you desire without having to work for it. All right? Now, let me know, does that make sense? The ability to live and maintain the lifestyle that you desire without having to work for it. Living the lifestyle that you desire without having to work for it. Think about it. And lifestyle that you desire is, lifestyle that you desire to live. Drive the car that you like to drive. That's the car that I'd like to drive. You live in a neighborhood, or your family lives in a neighborhood or in a house that you'd like them to live, right? If it's going for holiday, like Washeke likes going for that holiday, right? If it is, again, what the lifestyle that you desire, if it is dressing in the latest fashion, having that iPhone, which is not bad, by the way, imagine living that life without having to work for it, right? Now, guys are saying that it doesn't sit right to some of us because, again, we have to work, right? But let me tell you, if you're not working, then that means that something needs to be working for you, all right? Now, what is this something that is working for you so that you're not working, but you're enjoying this lifestyle, all right? Yes, I like what Brian is saying. Brian says passive cash flow to finance your lifestyle. Okay, yes, I like what Eunice is saying. Now, your money and your assets will now be working for you so that they fund your lifestyle, all right? So your money is working for you and your assets are working for you. Now, these are what are going to fund your lifestyle, right? So that we live this lifestyle that we like to live without having to work for it. Again, why? Because we have assets that work for us, and these assets are now what fund our lifestyle. All right? Great. Edwin, yes, I agree. Money may be working for you, but you still need to monitor on its performance, which is working. I agree. You can invest and increase your assets. Correct. Right? Now, I know you're wondering, if you're like this guy here, you're wondering, now, how do I get there? How do I get there? Tafika Japo, where I am living the lifestyle that I desire. I'm driving the car that I want to drive, living in that nice neighborhood. My kids are going to a good school. How do I get there? I know that's what you're wondering. How do you get there? Guys, now, first of all, I'd like to say that it is possible for you to be here, right? It is possible for you to get there, right? And I'm going to show you how, right? Now, at Centonomy, we say that wealth creation is just like weight loss, okay? Now, I'd like you to tell me in the chat box, what do you do when you want to lose weight? What do you do when you want to lose weight? Thank you, Brian. We go to the gym. Exercise. Fantastic. Eat less. Eat well. Diet. Yes. Change your lifestyle. Yes. Set targets. Exercise. Change diet. You routinely hit the gym, not just once, but routinely. Okay. You fast. You work out. Control your eating habits and frequency. All right. Watch what you eat. Exercise. Discipline. Stress yourself. Eat healthy. Discipline. Get a strategy. All right. Now, wealth creation is just like it. See what you are telling me. I can do the same about wealth creation. Right. This is because it is simple, but it's not easy. All right. It is simple, but it is not easy. Why do I say it is simple? I say it is simple because you have already told me what I can do, what I need to do if I want to lose weight. You've already told me, right? So it's simple, right? But it's not easy. Think about it. The act of going to the gym, right? Lifting weights, all right? Just think about it. Simple, simple boy, because we've said it. We've mentioned all the ways, right? But it is not easy, all right? Think about it. Waking up early to go for a jog, hitting the gym, it is not easy, right? Especially that part for dieting. Imagine you go for a function and guys are there lining up for food. Guys are putting meat, guys are putting chapos, and you're there, putting veggies. Why? Because you are watching your diet, right? Again, it is simple, but it's not easy. Same as wealth creation, right? So guys, wealth creation is just like weight loss. It is simple, but it is not easy, right? Now, it requires dedication and discipline, as Brenda is saying. It requires sacrifice, right? Same as wealth creation, right? Now, let me show you how simple it is to create wealth. Let me show you, right? Now, first thing you need to do, when you're thinking about wealth creation, the first thing that you always need to do, as you can see from the photo there, is to keep more of your money, right? Keep more of your money, right? Now, finance people always say, pay yourself first, all right? Pay yourself first. That is, keep more of your money. And what does pay yourself first mean? Paying yourself first means that each and every time you get money from wherever source, so long as it is legal, you need to pay yourself first, all right? Let's think about it. Every time you get money, yes, spend less than you earn, right? So every time you get some money, whether it is a salary, an allowance from your folks, pocket money, you're in a business and your business has made you some money, the first thing that you need to do is to keep some of this money before spending, right? So we say save and invest first, all right? So pay yourself first by saving and investing, all right? Why do we do this? We do this because if you say, I am going to spend now and then, I will save what is left. What happens? What happens is that most of the time, there is nothing left. Again, when you're starting, it's very hard, but as the discipline kicks in, then you'll find it's going to be easy, all right? Now, as we do this, I'd like to tell people that you should have at least 2 bank accounts for us to achieve this, right? Have at least 2 bank accounts, okay? So we have a current account and we have a savings account. At least have those 2 types of accounts, all right? So this is what you're going to do. If you're employed and you want to start paying yourself first, what you need to do is now open a savings account if you don't have one. So you have a current account where your salary hits, and then have a standing order, right? And then instruct the bank that when money hits my current account, kindly take this to the savings account, and then you give them the details, right? So that they do it for you. Other than a savings account, what else we need to do with our money is we need to also keep it somewhere where it can grow, right? Because when you're saving money, it might not necessarily be growing, but we also need to put money where it can grow as well, all right? Now, whenever you're saving, whenever you're investing, you need to have an end goal, okay? You need to have an end goal. Why? Because we say saving for the sake of saving is boring actually, right? So you need to have an end goal as to why you're saving, all right? Now, this end goal will be what is motivating you to actually save, to actually keep on, right, saving. Because if you're saving for, you don't know what you're saving for, then it's going to be hard, right? But if you have something motivating you, if you have an end goal motivating you, then you will have, you'll have that psyche and energy to actually save, all right? Same as investments. Now, depending on what you want to achieve, depending on what your goal is, then that is how, or that is where you choose where you're going to put your money, all right? Now, let's talk about investments, especially us as young people. Now, always remember that investment options are driven by goals, okay? Investment options are driven by goals. And these are the 3 goals that we've identified, right? The first one is capital preservation. second one is income, and the third one is capital growth. All right? Now, I'd like you to tell me, what do you think these terms mean? Capital preservation, income, and capital growth. What do you think they mean? And I'm going to put a disclaimer that finance guys are not so creative. We use words as they are. So with that disclaimer, what do you think capital preservation means? What do you think income means? And what do you think capital growth means? Putting money, maybe I put money 10,000 today here. If I'm putting it for capital preservation purposes, then when I come tomorrow, I expect my 10,000 to be there. Next month, I expect my 10,000 to be there. 2 years down the line, I expect my 10,000 to be there, right? So I am preserving my capital, right? So an investment should at least preserve your capital, a good investment that is, right? So if there's somewhere you're putting money and this money is depreciating, right? Or you will get less than you put, then that is not a good investment avenue, right? So the first thing an investment should do is to preserve your capital, right? I put 10,000 today, 2 months down the line, I have my 10,000, right? Now that is capital preservation. Let's talk about income. What do you think income means? This investment that is giving you income, what does it mean? What do you think this looks like? Is money coming your way regularly? All right, so it comes regularly. Think about a salary, right? As an income, and it comes regularly. So if you want to invest, or if you want to put your money where this money, you don't want to preserve it, but you want this money to be giving you an income, right? To be paying you, then we have a few options that you can think about, all right? Now, this type of options are especially good for guys who are approaching retirement, right? Why? Because one of the biggest problems in retirement is the income, right? Because if you retire from your job, then you're not getting money as regularly as you used to, right? So we have this type of investments, right? Now, one of the best investment options that gives you an income is something called a treasury bond. And I see someone had mentioned it on the chat box, right? So a treasury bond will come here in this category of income, right? All right, a treasury bond will come in this category of income, right? So a treasury bond is us, the citizens, giving the government a loan, and then the government pays us back with interest, right? It can be short-term, and there are others, no, these are actually long-term, right? Treasury bills are the ones which are a bit short-term, right? So we can have treasury bonds for 2 years all the way to 15 years, right? So imagine you've put your money somewhere that you're expecting it to get it back in 15 years. But in between these 15 years, this investment is going to give you an income, right? So that is what treasury bond is, right? So you put your money, let's say you put 50,000 in this treasury bond, and then this treasury bond is maybe 15 years long. In between these 15 years, this your 50,000 will be giving you an income each and every 6 months, right? So that is what a treasury bond is, right? So this type of investment gives you income. The minimum to buy a treasury bond is 50,000, all right? 50,000, and what you need to do is go to central bank, and then you get the process there. Growth is exactly that, is increasing your capital, right? So I put my 10,000 today, tomorrow I want this 10,000 to be 20,000, all right? So it's growing your initial investment, yes. So I put an investment of 1,000 today, tomorrow I want this 1,000 to be 2,000, okay? I don't want to preserve this capital, I don't want this money to give me an income, but I want this money to grow exponentially. So stocks or equities is, or shares is one way you can grow your capital. So capital growth, we can have shares, you can have business, real estate also grows your capital, right? Now, let's talk about shares. Let's talk about, again, we are here to talk about things that you can actually start doing tomorrow, right? Like what you talked about, paying yourself first, opening at least 2 bank accounts, right? It's things that you can actually start doing tomorrow, right? Now, let's talk about shares. And I like shares. Why? Because they're good, especially for us young people, right? They're good, especially for us young people. And depending on the company that we choose to invest in, they may not be so costly, right? So, talking about shares. So shares, equities, or stocks, right? We all know the stock market, right? So companies go public when they want more funding to expand. So what they do is sell some of their shares to, to the public, okay? And now, shares are good. Why? Because first of all, they have this aspect of capital growth, right? Let me be quite practical, right? And give a very good example that's out there. When Safaricom shares came, the IPO, they were at 5 shillings. Now they're at 40 shillings per share, right? So imagine, you've grown your capital from 5 to 40 per share, right? Now, the difference between stocks and shares are the same. Stocks, shares, equities are the same, right? So when you want to buy shares, first thing you need to do is to open a CDSC account, right? Open a CDSC account, right, from a licensed stockbroker, okay? And then need to know that the minimum shares that you can buy in a company is 100, all right? Minimum shares is 100, and open a CDSC account. For bonds, it was CDS. For stocks, it is CDSC account, all right? Are we together? Now, when you are choosing which company to buy shares in, this is what you do. Go to the stock exchange, look at the companies that are trading, and then these companies that are trading, ask yourself this question. If you want to invest in a company, ask yourself this question. What product or service does this company sell? All right? Now, if you're following wisely, then you will realize that there's this thing called risk, right? So whenever you're investing, whenever you're putting your money somewhere for it to grow or to give you an income or to preserve it, there's always the issue of risk, okay? There's always the issue of risk. So if you've been following closely, then you will realize, or you will see, that capital preservation options give you low returns, but also very low risk, right? And then this other side of capital growth, things like stocks or a business, they have the potential to give you high returns, but also the risk is also high there, all right? So always remember, when you're investing or when you're putting your money somewhere, remember there's always the concept of risk, right? Now, for us to be able to be in a safe place, what we need to do is we need to have our monies or our investments in at least all these 3 areas, right? So have some in capital preservation, have some in income, and have some in capital growth. And then we will be okay when we do that, all right? Great. Now, let's talk about unit trust. Again, we are here to talk about things that you can start doing tomorrow, right? Now, we've talked about treasury bonds, we've talked about shares, we've talked about capital preservation like savings account. Now, let me culminate all these investments with unit trusts. And why I am ending with unit trust is because this will give us all the 3 options depending on what unit trust that we choose to invest in. And also, they are a good entry, especially for us young people, right? Now, remember, when you're investing, the goals are capital preservation, income, and capital growth, right? Now, unit trust actually give us all this. Give us capital preservation, income, and capital growth all in one, right? Now, I know you're wondering, what is a unit trust? Okay. Now, unit trusts are collective investment schemes, right? So collective investment schemes that us as people or as the public can invest in through a fund manager, right? So we need someone to invest on our behalf, and then this investment make returns, and then that fund manager now redistributes the returns to us. Now, let's go to the other tips. Now we've seen how we can save and how we can invest, right? Now let's see what else we need to do very quickly as we close. The other thing that you need to do for us to get to that area of wealth creation is to track your spending, right? Now, this is quite simple, right? But remember, it's not easy. It's quite simple. Tracking your spending. What do I mean by tracking your spending? I mean, each and every single shilling, cent that leaves your pocket, that leaves your M-Pesa, that leaves your wallet, that leaves your bank, you need to know where this money is going. But implementation is where things become thick, right? Guys, we need to have a plan for our money. And I always say this, if you don't have a plan for your money, then someone else will have a plan for it, okay? So how you have a plan for your money is by having budget, okay? Now, budget is simply a tool that helps you on how you will spend your money, that shows you where you will take your money, right? Now, a budget is not supposed to be there to restrict you, but it's supposed to be there to guide you on how you're going to spend your hard-earned money. Always remember, the first rule of budgeting, spend less than you earn, right? So spend less than you earn, right? That is, money coming in should be more than money going out, all right? Great. Now, let's talk about expenses. Your expenses, because again, there can be so many, we need to manage them and categorize them into categories so that we see now how we can be able to manage them better, in a better way. Now, at Centonomy, we have the A, B, C expenses, right? So A is essential, right? So think about it, the things that you need for life to be life. We have food, we have transport, we have housing, right? So that is A, category A, essential, right? And then you have category B, which is important, not essential. Examples of hair care, fancy clothes, right? So it's good to dress nicely, to have your hair did, but it's not essential, all right? And then C, we have everything else. Everything else, we have things like, going out, drinks, Uber, all these things, right? So remember, expenses can be so many, but you need to categorize them into these categories so that you can now be able to manage them, right? And how you can manage them again is by categorizing them. So have at least these 3 categories in your expenses, right? And it is for you to know what is essential to you, what is important to you, and what is everything else to you. When you look at the B and the C, when you now put your A and B and C together, then your money will not stretch as much, right? So that's why we need to categorize our expenses and then see how we can minimize C expenses, see how we can minimize some of the B expenses, so that if not, mostly we're left with the A expenses, right? Because again, if we are left only with some of the A and B expenses, then our money will stretch the most, all right? So again, categorize the expenses to A, B, and C, and then from these categories, you will be able to see now, can I cut some things in my C categories, right? What am I able to cut so that I can have more money,